and join me here on stage. A very warm welcome. Very much looking forward to your speech.
Thank you. Great to be here.
I am sure we can learn a lot from you.
Let's see.
And if you have one or the other tips for startups, is also very much appreciated.
Good. Thank you.
Take it away. Thank you so much.
Bonjour tout le monde. Avant que je commence en anglais, j'aimerais commencer avec la chose suivante. J'aimerais féliciter à l'organisation pour cet event, parce qu'en fait, avec la mission qu'on a tous pour avoir beaucoup plus de capital pour les startups suisses, des organisations et des conférences comme celle-là ici, c'est super important. Donc, thanks a lot. I'm very honored to be here, and I will come back in a few years if you guys want, and I will try to explain to you how I see capital, traditional capital, transforming to private markets, venture, and what we should do. Well, first of all, for me, always something which I worked a lot is the next gen. You know, I see a lot of next gen people. I feel still like a little bit next gen with my sneakers, to be honest. And the next gen of wealthy people, they are super key to actually make sure that we're going to have a much bigger pot to invest in venture. And I just have 3 statements to start, which are quite mind-blowing and which are actually true. So this is the first one, which always amazes me and should scare every banker in the room, because, you know, there is such a huge shift of capital, such a huge shift. You know, it comes slowly, and as we know, it's a traditional business, it takes time, but, you know, it comes, and the shift is here. I see that since a few years, so that's an absolutely key message in terms of preparing every financial institution to make sure that you guys have an offering for the next gen, for private markets, for tech, and for venture. And this one here is even tougher. This one here is even tougher. You know, 85% of next gen clients, they switch bank or their client advisor. 85%. This kills you. So, you know, if you really want to keep these guys, you need to have solutions for questions you get. Third one, I think this is very clear. NextGen has another view of investing, of the world, of opportunities, of how to invest money. And that's going to be actually the key for success also here in Switzerland for the future, for financial industries, but also to actually make the fusion between offerings from financial institutions and having enough capital to boost the best ones here in Switzerland. What does the next gen demand? Very tech-driven, very efficient. These guys want to have an efficient setup for their financial solutions. Transparent pricing, which is a tough one, but that's the new world, and that's here. That's not gonna go away. I think talking about transparency in pricing, it's gonna be performance. You know, everyone I see in our funds, you know, as long as you perform, they're very happy to pay. You know. And I think that's an absolutely key trigger for the next gen. Easy to handle, should not be complicated, not reportings with I don't know how many paper. I think that's quite clear. And I see a strong push to alternative investments. These guys want to be entrepreneurs themselves. They want to see the companies. They want to understand. They want to invest. It's a completely other generation than the generation of their parents. The challenges, quite often I see the challenge of know-how, because these guys want to do things, they want to invest in startups, they know the guy of the guy of the guy and want to invest, but actually they have no clue in what they invest. That's a big topic, but a huge opportunity for us as venture capitalists. Access is a big topic as well. You know, you can have a 50 startup pipeline. If they're all lame ducks, it's a difficult access. You know, you need the golden tech nuggets, you know, these ones. And this access is not so easy to get. Same with structuring. I see a lot of people having a hard time to structure a private market portfolio. So that's also something I see as a big challenge right now, and we're trying actually to solve these challenges from our side. That's the reason why we, 2 years ago, with Swiss Ventures Group, we actually founded a competence center together with IMD the Venture Asset Management Initiative, where we have a 2-day program for every investor, every client advisor, every family office guy who wants to understand how to invest in venture as an asset class. That's just us in our mission to, help the ecosystem to get more fucking money in this ecosystem. I'm going to talk about it. Venture as an asset class, I think that's certainly quite clear for you. There are private markets. Within private markets, you have private real estate, private debt, private infrastructure, private equity, and venture. Venture is a very small asset class. That's the big challenge for a VC, to really get a huge asset under management base, because it's always a small asset class, even within private markets. That's my favorite slide. I hope you can see it, because that's for me the role model of the endowment funds from the US. If you take Yale, for example, Yale invests 70% of the total allocation in alternative investments. Can you imagine doing something like this in Switzerland? A pension fund, they all gonna shake like crazy. But in 20 years, Switzerland has to be here. In 20 years, if in 20 years we're not here, the Swiss startup ecosystem is going to be nice and friendly and cozy, but it's not going to be a key player in Europe. That's my conviction. Why is it completely different in the US? Well, because Yale started 50 years ago, and they survived all the cycles. They did 50 years of venture. One vintage was great, one vintage was difficult, but the third one was great again. If you have an X7, it's great. If you lose your invested capital, okay, it hurts, but it's okay. If the next one comes, that's the mechanism. We are not there yet. We have a first cycle in Switzerland. That's what I see right now. Now everyone is hurt because now we have the first crash, so-called. But that's only a first cycle. Let's see in 30 years. And it's going to move forward. And actually, you can also see within the 70%, you have 21% just venture. 21%. Now, this is the extreme. Why is it extreme? Because Yale has their own ecosystem, their own pipeline, their own incubator, so they can, very proprietary, they can invest. That's a big advantage. That's, for example, something, if you take Northwestern, they don't have that. That's maybe because they only have 2.4%. But still, they invest 2.4% in venture. If you look at performances, this is a very straightforward slide over the last 10 years. You see the annualized performances over the 10 years on the right side. You see venture capital quite a lot on top. 2020 was the dream year. If you had exits in 2020 and you could really exit your fund in 2020, was the perfect timing. Problem is, it's all about timing. So you also have other years, other vintages, but that's part of the game. But in all, if you look at the performances at alternative investments, I think it's a must. In 10 years, every investor in Switzerland needs to have a private market portfolio besides the public market portfolio. For me, that's very clear. If you don't do it, you're boring. Swiss venture market, I think Patrick already mentioned a lot of things. Just that slide here, that was the reason why I started 15 years ago Swiss Ventures Group. 10 years ago, I started to invest 15 years ago, because I'm coming from wealth management, and I was advising ultra-high net worth individual families. Huge assets, and only so little going into the Swiss venture. And I said, we have to change that. And still, 15 years later, that's my mission. We have to change that. With venture, we have to do what private equity did 25 years ago when Partners Group started. It's the same story. The only difference is slower volume, much smaller, but it has a huge impact for Switzerland. So it hurts a little bit if you see more or less the net worth and you see how much went into VC last year. 2.6 billion. Everybody thinks it's a lot, it's nice. No, forget it. It's not a lot. It's stop with this. Don't be very proud about that. It's much too small. Much too small. Maybe you know these slides, just a little bit what happened. I mean, if you look it over 10 years, 2014, we were at about 450 million for the Swiss venture business. In the peak in 2022, we were at 4 billion. Now we are down to 2.6. That's, I mean, if you stretch it, it's a trend. It's a positive trend. But as I already mentioned, should be different. A lot of rounds, so activity is here. That's good. That's very good. Seed, I think we don't need a lot of money for seed. Switzerland has a lot of seed money. That's great. Patrick also mentioned it. Later stage is the big topic. Later stage is the big topic. I see a lot of startups failing, not because of the founders, not because of the proprietary technologies, the IP. They fail because they can't grow with financing. And that hurts. I mean, that's completely stupid. And that in our overall ecosystem, our system, it has to change. Just quickly on the left side, I think you also know that slide. You know, we're very strong in biotech, clean tech, ICT is strong as well. The right slide is a huge spaghetti slide, so I will let that one go. That one as well on the left side, Patrick mentioned Vaud, Zurich. I think we're between Zurich and Vaud, we're very strong. Also with the two universities. I mean, we have top-notch founders, top, world-class, but we are zero on growth financing. How stupid is that? US investors coming to pick our golden tech nugget where we finance them on early stage, high risk, super high risk, to high risk, and then we say, hey guys, I'm sorry, we have to give you the match ball. I can't play it. How stupid is this? This has to change. By the way, that can only change if the institutionals are kicking in. Without the institutionals, we have no chance. If you read the book about Silicon Valley, same story. As soon as they started, they got quite a good pace. Institutionals started started as well, and that gave the big jump. That's missing in Switzerland. Pension funds, already when I come, they shake, you know. It's, I don't get it. I mean, I'm a little bit frustrated, but we're going to make it happen. We're going to make it happen. And that's the positive thing. I mean, we have great successes. Here, just a few. A lot in the life science, that's from last year. So it's coming, eco-robotics, we saw it also before from Vaud. Top-notch company. Guys, if you can invest in eco-robotics, it's quite expensive in the meantime, but that's a safe one. That's a safe one. I'm very convinced. I saw the guys last week. Amazing. Maigret, who's taking over as CEO. Fantastic. Great next step. That's going to be a fantastic exit. That's a slide I use quite often when I see international investors because they always tell me, Switzerland is small, Switzerland has no exits, Switzerland has no unicorns. No, that's not true, actually. We have unicorns. We have 45 unicorns in 2022. That's a slide which has to be adapted every year, but we have great stories, and that's more or less the story of unicorns of the last 10 years. I mean, LeonTech, okay, it's a fintech. Today it's at the stock market, but at that time, in 2015, it was a fintech. It was maybe the first Swiss fintech, you know. And that's a great success. Avaloq, the same story. Francisco Fernandez, I mean, he started from scratch. It's not that, it was a big corporate right from start. So who are the investors? I see quite a lot of family offices kicking in. That's good. Private individuals, the business angels, still super important. Pension funds, we have a few, but really only a few. And that's a big challenge to, you know, to crack them in terms of venture business. I think it's going to take another 10 years, to be honest. On the European level, I mean, UK is quite strong. France, as you can see on the right side, change in VC over 4 or 5 years. A huge jump. That's because Macron started super strong to position French tech. Super strong. Super ambassador, very promotive, brought a lot of people in, big conference in Paris every year. The whole world is coming. That has a huge impact. By the way, that's also a little bit missing in Switzerland, I have to say. We could have some really great politician ambassadors who push that thing much more than what we have right now. Just quickly, Swiss Ventures Group, as I said, founded 10 years ago. We have a fantastic network of investors. I'm very proud of some of these guys because they help a lot. By the way, who knows Guillaume Pouza? Oh, at least a few. Wow, 4 people, 5 people. I mean, Guillaume Pouza is the most successful fintech investor in Europe. Fintech founder. Originally from Lausanne. Unfortunately, in 2012, he founded his fintech in London because the regulator was not ready for fintechs in Switzerland. It's checkout.com is his company, multi-billion company. Always doing CR, CNAL in summer. Someone who is not well known in Switzerland. Someone who is with us and helps us to build the link to other markets. Yeah, that's a guy actually we should know as an ambassador for success. In Switzerland, it's not the case. And another one, just quickly on the left, was Wittlisbach, founder of Partners Group. I mean, these guys are unbelievable what they have built. And I think all together in the VC ecosystem, we should try to build the same for this asset class VC. That's the mission. Yeah, we were quite happy with our performance. We had our first fund, early stage fund, 2016, 2020, with a great realized performance, which was also a question of timing. You know, if you get the right timing and you have exits in 2021 on the peak, it's perfect. It could have been that we don't have these exits, and 2022 you forget it. You know, so it's a lot about timing. I have to say, vintage number 2 with fund number 2 and 3 is closed. It's going to be a tough vintage. Vintage 2020 to 23 is a very tough vintage. Very tough vintage. So, to be honest, right now, if you build new funds with all what has happened between 2022 and 23, now the time is super interesting to build new funds. Because the cycle is picking up again, valuations heavily coming down, distressed situations. So that vintage is going to be a very good one, I'm convinced. Voila, that's it. I don't know if I'm on time. If you have any question, please let me know.
Thank you so much, Mike, for this passionate presentation. What's your expectation? How long will it take until the pension funds finally start to pick up in Switzerland?
10 years.
10 years, at least.
I met 48 pension funds in 2022, early 2022. And my experience was that a lot of these guys just don't know what venture is. Point number 1. Point number 2, they're really not risk-taking. You know, they don't want to take too much risk. And they need education. You know, education is a big topic. And we try to do that through the IMD program. And I hope it comes, but it takes time. Yeah.
Okay. And if people here in the room would like to participate in some of these great growth multiples, how would I practically, as Olga, do it?
Okay. So right now, actually, we are preparing the next fund. Timing is good. So next year, I think second half of next year, we're going to launch the next fund. Right now, the funds are closed. So yeah, stay in touch with me. You guys are going to find me. Come and visit me in Zurich. I'm quite often in Lausanne, and I love people. I love meet all the people to know, what's going on. And yeah, just shoot me an email, whatever, with great pleasure.
Sounds exciting. Thank you so much for taking time being here and for these great insights.
Thank you.
Mike.